And what else did I read there? I read something about debtors control. Debtors control will be recorded in trade and other receivables. So I will just put it there and I'll put that 100,000 there as well. Stationery will be recorded in the statement of profit or loss. I'm just going to leave stationery out for now, okay, until I've read all the adjustments. And everything that I read there will be recorded as balance brought down. So in our general ledger, balance brought down for sales will be 600,000. Remember, sales is income. Income increases on the credit side. And cost of sales will have a debit balance. Okay, I can't do it here. I can't show all the balances. All right, I'll just have to do it step by step. Let me just go back to the question and answer the question. The first point, I just wish everyone could watch these videos that I record when it comes to adjustments, including the grade 12s. Because once you watch all these videos, all adjustment videos, by the time you prepare your full statement of profit or loss, or your income statement and the balance sheet or statement of financial position and the notes relating to financial statement, it will be quite easy for you. Because when I start doing past papers, I don't explain thoroughly because I'm assuming that you have watched all these little parts of your income statement that I have done. And when I prepare or go through a past paper, I'm assuming that you went through these videos. And the first adjustment says that a debtor returned goods with a selling price of 36,000 as these goods were not ordered. Now, when it comes to this, I assume that you have watched videos on debtors allowances. And if you have watched the video, which is adjustments on debtors allowances, you will know that return of goods affects four accounts. Four accounts. Okay, the first account, actually, it's return of goods by customers. It affects four accounts. The first account will be your debtors allowances. Your debtors allowances will be debited and we will credit debtors control. And the reason why we debit debtors allowances is because debtors allowances is a reduction of sales. Therefore, it increases on the debit side. And we are going to credit debtors control because that is our asset. It means this debtor that has returned the goods will be owing us less. Based on that, I will start with a journal where everything starts, which is my general journal. I will debit debtors allowances, which is just a reduction of sales, and I'll credit debtors control. And I'll explain why I am doing this. And that's why, guys, if you understand these little pieces, it'll be easy for you to answer any paper. If it were to me, if all the students that are doing accounting just watched all my videos, none of you guys should even be getting less than 100%, to be honest. None at all. If you just listen to all the videos you recorded and you wrote all the notes down, you shouldn't be struggling at all. Okay, now, once I've done this, I am going to, let me see what I can do here. Okay, I'm going to take this to my debtors control. I will just go to the statement of profit or loss, and from my sales amount, I will subtract that 36,000 rand. So basically, that's what I will do. From sales, I'll subtract that 36,000. At the same time, I'm going to go to trade and other receivables, and from debtors, I will subtract that 36,000 rand because that is the first adjustment. That's what it wanted me to do, and I have done that. Done with that part. However, that part has other parts as well. All right. We were told that these goods, it was not an allowance. You have learned this from grade 10. It's not an allowance. These goods were returned by the debtor, therefore it affects four accounts. And the other accounts will be the company uses a markup of 20%. So we have to take that 36,000 and calculate the cost price of that 36,000, right? And how do we calculate the cost price of the 36,000 rand? We will take the 36,000 rand, multiply it by 100, and divide it by 120. Okay, so this will affect the other two accounts, which is your trading stock and cost of sales. Trading stock will be debited, cost of sales will be credited. I will debit trading stock by the cost price of goods returned because I am getting back more stock. Grade 9s as well. This is where I actually explain this when I prepare the ledger accounts from our debtors allowances journal. You know, the total of cost of sales. That's where I explain as to why we have more trading stock. It's because the debtor is returning those goods. That's why our trading stock is increasing on the debit side. We good? Now, to calculate cost of sales here, you take 36,000, you multiply it by 100, you divide it by 120, which is 100 all over 100 plus markup. Okay, and that will give you 30,000 rand. Cost of sales will decrease. Cost of sales will only decrease by the cost price of goods that were returned. That's it. And I explain this. If you confused, please check out a video written Debtors Journal, and that's why I explained it there thoroughly. And it's a grade 9 Debtors Journal. If you're doing grade 10 as well, check that out. If you're doing grade 11, check that one out. If you're doing grade 12, check that one out. I simply start with the basics, and once you understand the basics, you are done, guys. All right. Why am I debiting trading stock? I've explained it, so I won't read it. One of the subscribers said that I'm reading a lot instead of talking. And the thing is, what I wrote here is what I will normally say. And because these notes, I actually write them. So everything that I write here, it's what I will normally say. And that is why I normally read it, because I know that most of the kids, when I say that, I said this to you guys, I said David debtors allowances, and they will say to me, you didn't. So as proof that I have said it, I will normally write that as the note. Okay. First of all, this is what I just noticed here. I said that debtors allowances decreases sales. I think this relates to the previous explanation. I will correct this quickly. Okay, the reason why we debit in trading stock is because the debtor returned goods. That's why we debit in trading stock. So we have more stock. And we credit cost of sales because cost of sales decreases. It only increases when we sell. Therefore, when goods are returned, it will decrease. We good? You did? You got it, right? Awesome. All right. And that's it. Okay. Oh, well, it's not it. First of all, this affects our trading stock. I will quickly adjust my trading stock in my workings as part of the workings. Grade 12s get working space. Grade 10s, 11s, and 12s will get a working space. Normally, in my trial balance, I had trading stock amounting to 800,000. Now I have more stock amounting to 30,000 because these are returns. All right, so I have sorted out the stock, but then I will also go to cost of sales. Where do I normally find cost of sales? Cost of sales, I normally find it in the statement of profit or loss. Therefore, I will decrease it. It decreases when goods are returned. That's why I'm decreasing that by cost of sales. Someone might be asking me, why are we not calculating cost of sales for the 56,000 rand? That 56,000 rand is debtors allowances that was given in the pre-adjustment trial balance. The fact that we've got debtors allowances in the pre-adjustment trial balance, it means that cost of sales relating to those debtors allowances were already recorded. So the cost price amounting to, of that 56,000 rand is already recorded. It's already included in that 500,000. Actually excluded, has already been excluded from that 500,000. So we only record the cost of sales of debtors allowances that appear in our adjustments. That's it, guys. Okay. What if there was an omitted invoice? You do the opposite, where you were supposed to subtract, you add. And if you don't know what I'm talking about, also check adjustments relating to debtors allowances, where I explained it thoroughly. All right. Just check your playlist and check podcasts. and you will see everything there because I have divided everything into parts. All right, I hope even the grade nines will check these videos out to know what to expect next year. All right. All right. So my cost of sales here will be 470,000 Rand. Okay. Easy, right? I know. Take your sales amount of 508,000 minus that 470,000, you will get gross profit. Gross profit is just sales minus your cost of sales. Okay. That's it, guys. That's it. Okay. I hope grade 12s are also checking this one out. Um, towards the end of this video, I'll just give you random question papers. I don't even know which question paper to pick here. Just to show you that this is there in grade 12, guys. It's not something that you learn in grade 12. You have learned this in grade 9. It's just that we add on to it. That's it. We just add on to it. The principles remain the same. Obviously, for me, I focus more on the basics. I don't just look at the past papers. I focus on the basics and I explain the basics. And once you understand the basics, nothing, failure shall not prosper against you. All right. Let us check out uh, the next adjustment. Let us check out the next adjustment. What does it say? It says that due to rise, the company's warehouse was satellite and stock worth 50,000 was lost. Immediately when you see stock lost, guys, that 50,000 is gone. You go to your trading stock and you subtract it from your trading stock. You see, I'm going to go to my trading stock and subtract the whole 50,000. It's gone. All right. It's either it was stolen, it was due to theft, it was due to fire, it doesn't matter. Put the whole amount that was lost out. Okay. There's one question that I did in one of the past papers where they said 6,000 was stolen and stock amounting to 50,000 was stolen. You just take the 6,000, you put it as lost due to theft because that's money. You won't get it back. Okay. Most of the time, most insurance companies won't insure the money, but I know that some businesses do actually insure the money, right? So you also need to be very careful there. But with respect to your stock, not all of it can be your loss. Here, I'm subtracting the total amount from trading stock, but it doesn't mean that the whole 50,000 Rand is a loss. It depends on how much we are going to get, how much we are insured for. Okay. And that's me just reading the first part. I'm going back to that adjustment. And now it says that the insurance company will only pay 60%, you see, but this has not yet been received. It means that the loss here is 40%. And I can rephrase this. It was rephrased in a question paper. I think it's this year's supplementary exam in grade 12, where they said the insurance company agreed to pay out whatever was insured less 40% excess fee. And students got lost because they only are used to the fact that I said the insurance company will pay 60%. And then guys don't memorize, learn to understand. And then they know that, oh, if the insurance company is going to pay 60%, it means the loss is the 40%. That's how students will normally interpret such a question. But now when I twist it a little bit, okay, take it a level higher, and I say that the insurance company has agreed to cover whatever was lost, less excess. And students don't know what excess is. Guys, excess is the money that you have to pay the insurance company. So it means you have to pay the insurance company 40%. When I say less excess fee, it means the insurance company wants you to pay 40% towards the insurance company so that the insurance company can pay you the amount that was lost. One of my students said, but that is so stupid. Why doesn't the insurance company just deduct the 40% from whatever they have to pay me? I also don't know why they don't do that, guys. So that they just pay you 60%. Well, no, you have to pay 40%. Know that when you pay 40% to get an insurance payout, the 40% that you're paying, it's a loss. It's a loss. You're paying the insurance company so that they can pay you, which is something very stupid, I must say. But hey, what can I say? That's me rephrasing this. So how do I record this? I will start with the journal. The reason why I'm starting with the journal, guys, I'm simply showing you the basics. I'm showing you the steps that are applied in accounting. It starts with the journal, it starts with the source document, and then the journal, and then the general ledger, and then the financial statements. I know most schools will go straight to the financial statement, but I'm showing you a whole picture, guys. All right, trying to be a painter here, but I'm showing you what's in the paint. We've got ink, we've got that board that you're using to draw. I'm explaining it from scratch, what made a whole painting, a whole picture. All right. Let's record this. Let's record this. You know that loss, guys, and that's where when you go to my grade 9 notes, I explained this thoroughly. Expenses include losses. So losses are just your expenses. So expenses increase on the debit side. And once you understand that, it will be easy for you. Before I even move to this loss, can I just do something that I forgot, which is me making a closing transfer. When I make a closing transfer, I'm taking my total debtors allowances. Now, what is my total debtors allowances amount? My total debtors allowances amount is that how much was it? I think it was $56,000 in the trial balance plus the 36,000 that we just recorded right now. It gives me 92,000. This is what debtors allowances is sitting at the end of the financial year. But at the end of the financial year, debtors allowances will be closed off against sales. So you go straight to your sales, you subtract your debtors allowances. Sales decrease on the debit side, and your debtors allowances in total will be 92,000. And then you credit your debtors allowances. Remember, when you recognize debtors allowances, we debited it. So when we close it against sales, we reduced our debtors allowances. Now it'll be sitting at 0. And we call this a closing transfer. All right. You good? All right. Let's just do this loss. Now, those due to buy back, it's an expensive, I've said, and it's just 20%. It's the money that you won't get back. You won't get this from the insurance company. You will not get it back. It's a loss. It's gone. Someone said to me, but why don't we recognize the full 50,000 as a loss? No, guys. Yes, we lost stock worth 50,000. It's gone, but the insurance company is going to reimburse us for the 60%. So the actual loss that we will never get back is only the 40%. It's either the 40% or the excess that you need to pay so that you can free the funds that can be paid to you, which is a stupid idea. Why do you want to be insured and then have money when everything goes bad? Aren't you insuring for the fact that when everything goes back, you don't have to pay money? And you will notice under COVID, insurance companies came with ridiculous clause. There were a lot of legal cases where insurance companies were just refusing to pay. They were just refusing to pay, which is weird. But we hardly have natural disasters or what we had, COVID. I don't know. What do we call COVID thing? It's not coming. All right. But the thing is, we hardly have it. The insurance companies are making money all this time. But when the problem strikes, they don't want to pay. They just don't want to pay, which is very, very concerning. Okay. However, the money that we are supposed to receive, we haven't received it. If we had received it, we're going to record it in the CRJ, but we have not received it. It will only be received in the next financial year. That is why we record insurance receivable, or you can write it as accrued income, which is just an asset. That's why we're debiting it. It's owed to us by the insurance company. It's a payout that needs to come to us, but we have not yet received it. And it's because these two it's because of the trading stock that we have lost. So these are just my explanation of everything else that I said here. Okay. I won't read it because you guys will say, oh, but you're reading what's written there. I've already explained it. Okay. It's just for you in case you didn't hear what I say. I'm talking too fast. You can go back, pause, and read and understand what is going on. What's going on. Okay, that loss, I'm going to write it in my statement of profit or loss, i.e. your income statement. It will be under expenses, loss due to theft. It will be 20,000. And the receivable will be recorded in trade and other receivables note. And we are going to record it as insurance receivable or accrued income, which will be 30,000 rand. Got it? Easy, right? Easy, easy. As Nasty Sue was saying. All right. Let us move to the next adjustment. I'm done with that adjustment. Oh, the next adjustment is about stock count. And I forgot something. No, it's actually not about stock count. It's about donations. Here they gave us the cost price of goods being donated. So to record it in our journal, we will just debit donations and credit trading stock. Okay, donations is an expense. Please remember, donations are always recorded at cost price, but this is donation of trading stock, and it will therefore reduce our trading stock. So I'm going to go to my trading stock and minus it. And now in my trial balance, this is how much I now have in my books, just based on source documents. All right. But then that is not it. At the end of the year, we do our stock count, and this is what we found out when we did our stock count, that we have stock amounting to 789,000. We are going to compare our stock count to that 789,000, and the difference will be either trading stock surplus or trading stock deficit. Stock count is what we can rely on. The reason why it's what we can rely on is because it's physically there. Or else what we did up there, guys, is just based on source document. It's based on receipts. It's based on invoices. It's based on credit notes. So we are not 100% sure that that is correct. But with stock count, guys, everything was physically counted. 1, 2, 3, 4, 5. So we have it there physically. It's there. And you will notice that what we physically counted is more than what we have in the books. So we need to increase what we have in the books. When we increase what we have in the books, that is a trading stock surplus. It is a trading stock surplus. Trading stock surplus, where we record it in our, well, let me start by recording it here. Okay, I don't know what happened there, but we first increase our trading stock by debiting it in our general journal and credit our trading stock surplus. And our trading stock surplus here will be completely lost the slide. I'm trying to get it back. Our trading stock surplus will be 14,000 rand. Okay, we debit our trading stock, credit trading stock surplus because it is income. That's why we credit it. All right. Before I even get to the last one, that trading stock surplus in our income statement will record it under operating. Oh, I forgot to record donations. Okay, which is under expenses. We'll record it under other operating income. Now, even I have some grade 11s and grade 12s that will write this as trading stock. Guys, note that immediately when you write it as trading stock, it's -1. It's a foreign item. Trading stock cannot be recorded in the statement of profit or loss. So that surname is key, guys. It's key. You can't make a mistake. You need to write that trading stock surplus. right? And then you show workings and brackets to get marks, and that'll be 14,000 rand. And you just put it in a box and put it on top of that box as it is the only income you've got. Okay, last one, last adjustment. What is the last adjustment about? My kids will normally say, oh, these things are too long. You see, guys, it's taking me less than 30 minutes to complete as well. I will only check out the video after this. Hi guys, fail at your own risk, honestly. The last point says that stationery used amounted to 13,500. That used is an expense, people. If you have a brother or sister or anybody or friend, whoever who is in grade 11 or grade 12, just tell them that stationery, it can be packing material used, it can be cleaning material used, it can be stationery used. The used part is the expense. That is the expense. And that is the value that your stationery must be recorded at in your statement, as in your statement of profit or loss, or i.e. your income statement. Now I'm going to check what I had as stationery from my trial balance. So stationery in my trial balance is 15,500. So I don't have any stationery from last year that was not reversed, which is good. Now I bought stationery amounting to 15,500. And at the moment, my trial balance says that my stationery expense is 15,500. And that is incorrect because we only expense consumables we have used. All right? Not the one we have bought, but the ones that we have used. And what do we need to do here? We are simply going to record what was not used as consumable stores on hand, which is an asset account. We will debit consumable stores on hand. It's an asset, it's your inventory, and this is how we found consumable stores. It's available for use minus the used. Okay, so for you to find consumable stores that was not used, you look at the stationery that was available for use, you subtract the stationery that was used, and that'll give you 2,000 rand. Ah, guys, I don't know why my kids are failing, to be honest. So our stationery needs to decrease by 2,000 because it's currently sitting at 15,500 and it's supposed to be sitting at 13,500. That is what our expense should be. And to record this in our income statement, you know what, I forgot to do the ledger accounts, but I'm going to do it later on. With our income statement, I'm simply going to record it under expenses. And for me to record my expense, I'll just subtract the unused from my total stationery that was reflected in the trial balance, and the used part will be 13,500. Okay, I just want to go back a little bit here because I did something that you're probably not aware of. When you take the 14,000 and add it with the 38,000, it will give you gross operating income. So our gross operating income will be the sum of the two, which will be 52,000. And that is before I did this. And my expenses, add the 5,000 with the 20,000 with 13,500. That'll give you a total expense of 38,500. Make sure you put it in brackets. Then take 52,000 minus that 38,500. You will get your gross operating profit, which amount to 13,500. We good? The unused part of that stationery, we are going to record it in the inventory note. Now, my kids will normally adjust the inventory amount here. Please note that the inventory amount that will be recorded here, the trading stock amount that will be recorded in the inventory note, is the stock that was counted, which is that 789,000. So you'll need to show it workings here, and then you will add your consumable stores on hand to get your total inventory, which will be the sum of the two, and that will be 791,000. That's it, guys. We're done. Okay. All right. Let's do the ledger accounts quickly. Ledger account is just a summary of everything that we've just done now. What do I start? Where do I start? I'll start with inventory. Our trading stock, trading stock was sitting at 800,000. We had to reduce it Let me just say we had to increase it by trading stock that was returned, which will be cost of sales. The AJ, the amount will be 30,000. Please check out my grade 9 video where I explained this thoroughly, and the grade 10, the general ledger grade 10 accounts where I explained it thoroughly. It will decrease by loss due to fire as well as insurance receivable, which is actually the 50,000 rand. Okay, and then we'll decrease it by donations and then increase it by trading stock surplus. And obviously the closing or the balance carried down will be the stock that was counted. Consumable stores, we didn't have any opening balance, so you'll just have to record it. It was stationery and just calculate balance carried on. It's consumable stores on hand. It's an asset account, so it will be a plus minus. Okay. And for our debtors control balance brought down for debtors control was 100,000. We had to reduce that by returns, which were amounted to 36,000 rand. So our debtors control closing value will be that 64,000 rand. Insurance receivable, it's a plus minus, it's an asset. It's the insurance amount we expect to receive, which is because of trading stock. And that will be 30,000. So it'll have balance carried down because it's an asset account. Sales is income. It's minus plus, it increases on the credit side. Sales already recorded amounted to 600,000. We need to reduce debtors allowances, which was 92,000. Okay. And the balancing figure, we're going to take it to trading account. Cost of sales amounted to 500,000. We have to reduce it by the cost price of goods returned, which was trading stock. It will be 30,000. The balancing figure, we are going to take it to the trading account, which will be 470,000. Loss due to theft, it's an expense. It's a plus minus. It'll increase on the debit side and it'll be made up of trading stock. If it was cash, we're going to write bank there. Okay. It will be closed off against profit or loss. Donations, similarly to loss due to theft, it's an expense. It will increase on the debit side by the cost price of goods returned. If it was cash, it will be bank there instead of trading stock. And we will close this against profit or loss as well. Trading stock surplus, it's income, it'll be minus plus, and income increases on the credit side. Anything that increases owner's equity increases on the credit side. And that is trading stock. Stationery, the balance for stationery was 15,500. We need to reduce it by this trading stock, by stationery that was not used, which is consumable stores of 2,000. The balancing figure is an expense. We will take it to profit or loss. Okay. And then that's it. That's it. That's it. That's it. That is it. I wanted to show you, I'll try to get a GDE paper. I'm getting my fingers crossed, hoping that we have something similar to what we just did. Let me start with GDE and then I'll go to IEB just to show you guys that don't take what you are learning now for granted and think that it will not be asked ever again. All right. I'm not even giving you, this is for grade 10, but obviously grade 11s and 12s can use this. But I'm just showing you that everything that you're doing now will be there in grade 12. Let me see if I can find DBE question papers. Let's start with 2022. It should be in paper 1. Let's see paper 1 if it has something similar to this. Okay. Let's see if it has something similar to this. Most of my notes actually come from past papers. I just take questions straight from past papers. And obviously I adjust them a little bit. Oh, I like this question here. Your stock records, they did it using inventory or trading stock. You'll learn about that later. Okay, let me see if there's anything I can use here. Basically look at that number 3, Roman figure 3 there. When you check out videos on debtors, bad debts, you will notice that it's quite similar to what we did. This is salaries and wages. You check out notes on salaries and wages. This is similar to that. Okay, okay. Guys, all of this is it's it's there in the notes. All right, it's not there. I wanted allowances just to show you what I'm talking about. Let me try same GDE. Let me try 2021. Hope we have debtors allowances there. This is 2021 paper one. Let's see if there's anything there relating to debtors allowances. Okay, there it is. But they, okay, what is GMO returned? Because this is us returning goods to the supplier. Are we GMO? Let me see if we are GMO here. Let me not just conclude. Are we GMO? Are we GMO? Are we GMO? Yeah, we are GMO. So it's us returning goods there. It's not the data. I'm trying the last one now. 2020. Let me see. 2020. November, paper one. Okay, GDE is disappointing me at the moment. Let me see if it's here. Anything similar to what we did. Okay. They just give us returns. They give it as inventory. I don't want it as inventory. I wanted to where it says that the data returned goods amounting to this much, you know. It's disappointing. Okay, it's not giving me what I need. Let me check IB. Well, I use a lot of IB. And I'm definitely sure it's here. Let's check this one here for IB. And you will notice that it's right there, like the first one there. Let me saw this is about the premium, blah, blah, two directors. Here it is. You see? There it is there. There it is there. As they were not to specification, the data was granted the trade discount and was only charged 15,000. So you have to cancel everything there. And look at this damaged goods and whatever. This is what we just did when we spoke about loss due to here it's due to damage and stuff. All right. But they're not saying anything about us getting the money back. So to employee, okay, so this one is actually, it affects your sales. It's the reverse of your debtors allowances. So you will increase your sales, increase, or it was increase bank, and then you increase cost of sales and you reduce your trading stock. Okay, at least IB papers are not disappointing. We have debtors allowance. Let me check 2022 if we have something there for 2022. Debtors allowance, which is just basically what we just did right now. Okay, there it is. There it is. The bookkeeper reversed to no. That's not the one. That's not the one. This is relating to what we just did when I spoke about the X's. So the 15% of what we lost will be a loss. Okay. So you see, guys, it's there in the exam. Obviously, this affects trading stock and creditors control. Okay. This is just me showing you that if you really, really understand these notes, you have no reason to fail your grade 12, right? For my students, grade 10s, please note that I won't be available tomorrow. My son is not feeling well, so I have to take him to the doctor. Please tell others to watch this video. And basically, it's us marking the work that I gave you guys today, okay? So during my period tomorrow, just ask one of the teachers who's doing subs to allow you guys to watch the videos. So you can download the video now at home and put on your headphones tomorrow in class and just go through this video, okay? Or just ask the teacher in charge to go to my channel and play you this video. It's totally up to you. But guys, I will not do this when I come back on Thursday. So make sure that you do what I'm asking you to do, right? I know most kids won't be watching this. Um, if you will be watching this before tomorrow, just let me know on my WhatsApp number or just under comment section. Okay, let me know that someone watched this video so that I know that someone will tell everybody tomorrow. This is just me checking who's actually watching the videos because I need you guys to watch these videos. If you don't understand, check out these videos. They will help you a lot when it comes to the exam. So so if no one says anything, I'll know that no one actually watches my videos, hence your marks are not going up. And I need you to watch these videos for your marks to go up. Okay. Cheers for now. Till Thursday. Please don't forget to subscribe, like, and comment. Also.